Let's now get down to some of the number crunching. It'll make this all seem a lot more applicable and easy to understand. So we're going to do an example on financial assets that are subsequently measured at fair value through profit or loss. And this first example is going to deal with equity instruments, not ours, but equity instruments in another entity that we purchase, such as buying shares as an investment. Okay, let's go. So here's our case study. On the 1st of January 20X1, ABC Limited purchased 10 shares in Plaque Gold for 95 Rand or dollars or whatever it may be each. Okay, so what I'm doing is I'm just substituting the currency. I'm not working in dollars or rands or euros specifically. I'm just going to call this currency units. The purpose of this investment is selling in the near term. Therefore, it will be fair value through profit or loss. The shares, obviously, from this 10 times 95 have a 950 currency unit cost. That's the transaction value. The fair value, however, was 1,000, and that was on the 1st of January 20X1. The shares were purchased directly from a distressed seller and not on an exchange. That's the reason for the difference between the fair value and the transaction price. We paid less than fair value because it was a distressed sale, a fire sale. Transaction costs of 100 were paid in cash. Ignore VAT and income tax. The reporting date of ABC Limited is 31st of December. The share price for Plaque Gold is 145 at the end of the year, at 31st of December. So we're going to have to do a fair value adjustment. Then ABC sold the shares for 130 on the 30th of June 20X2, the next financial year. And they sold that on the listed exchange directly, so we can assume that the 130 equals fair value. Just take a note, currency unit is represented by CU, so I'm not using rands or dollars or euros. So prepare the journals for me, please, for 20X1 and 20X2. What I want you to do is push pause right now, go and work with the journals I've already given you in the previous section of videos and attempt this. Give it a try. When you come back, then you'll work through it with me. So push pause now. I assume that you've pushed pause and you went and did this by yourself. So let's now move on and I will work with you through the figures. So we're going to start with initial recognition on the 1st of January 20X1. Now we knew that the debit to financial asset, and tell me fair value through profit and loss, in the statement of financial position, had to be at fair value. That's the rule, right? Initial recognition, all financial assets will be measured at fair value. Don't care what subsequent measurement is applicable. So here we were given the fair value of 1,000. We, however, only paid 950. So there's a balancing figure here, right? And that 1,000 minus the 950 leaves us with a credit of 50 that needs to be, well, put in to balance the journal. Where does that go? First day gain, profit or loss, always to profit and loss. Next up, we have transaction costs. And because it is fair value through profit or loss, what do? We will always expense transaction costs. So you'll debit transaction cost expense in profit or loss, and that was for 100. You will then credit bank in this scenario 100. So the carrying amount of the financial asset over here is equal to 1,000. That's nice and easy to understand. Now we get to the 31st December, our first reporting date. What do we need to do? Well, we need to revalue or restate the value of the financial asset. And that is going to be what? It will be 145 Rand, or dollars or currency units, okay, times by 10 shares. So 1,450. That is the new carrying amount at the reporting date. But it was previously done or carried at 1,000. So what have we done? We've done a fair value adjustment, an increase in the fair value of 450. So if I increase an asset, I will debit the financial asset. I debit it with the 450, and I will credit a fair value gain in profit or loss, because we're dealing with fair value through profit or loss financial assets, 450. So at this stage, now the carrying amount of the financial asset is equal to 1,450. Great, that's the reporting date, and that will go into the statement of financial position, into the balance sheet. Then, when is the next valuation date? Well, we sell this asset on the 30th of June in the next year, 20x2. So if I sell it, there's a transaction date. I must first revalue and fair value adjust this financial asset. And here, we must remember that the fair value given per the question, let's quickly check what it was. We sold it for 130. And I said, because it's on a listed exchange, 130 equals fair value. So let's go and do that calculation quickly. So here we're dealing with 130 currency units times 10 shares gives me 1,300. This time I have a 150 negative, a decrease in the fair value adjustment. If I decrease the financial asset, I will credit the financial asset. So I credit the financial asset 150, and the debit, the expense, the loss, goes through profit or loss, 150. Okay, so I first do the fair value adjustment before derecognizing and selling the asset. The carrying amount now is equal to 1,300. And I'm going to move on to the next one where I actually now sell the asset and derecognize it. And what do? I credit the asset to remove the asset from my books, derecognize it, and I'm receiving cash. Debit bank, make the bank bigger. So now the financial asset has been fair valued. Those fair value adjustments, whether it be a gain or a loss, have been recorded in the correct periods. The gain was in the 20x1, the loss was in the 20x2 period. All in profit or loss, because this is a fair value through profit and loss financial asset. Okay, so I derecognize the asset, it comes out of the books, the financial asset carrying amount is now equal to 0, but I have a bank balance jump of 1,300. This is the most common one to be tested. Guys, just be very comfortable that you know the journals and you can apply the basics. The only one that's really tricky here is to remember that when it's fair value through profit and loss, the transaction costs are expensed and the fair value adjustments go through profit and loss. That's the two things to really keep in your mind. Good luck. We'll move on to the next section now. Thank you.